Hello, everyone. Welcome to every Friday company financials. And today we're going to look into debt. So when we look at into company financials, one question usually comes up is, does a company carry too much debt? And there are really a number of different ways we can look into that. And today I'm going to focus on Tesla and explain the different ratios we can examine company's debt situation. So before I dive into the details of Tesla financials, I would like to make a disclaimer that I'm not a financial advisor nor lawyer, so please don't take it as a financial advice. So let's dive into details of Tesla's financials. So this data I put together really from Tesla's past 10K from 2018 to 2022. Please note that the data in here is in million US dollars. So let's look at asset to liability ratio. So asset to liability ratio is really, we look at total assets against its total liability. So in 2022, right? So in Tesla has more than double the assets than liability. And if we look back in 2018, right, it's about the same. It's 1.3 times asset to liability. And we can see over the years, right, Tesla has been strengthening its balance sheets. So the asset to liability ratio increased from 1.3 times to 2.3 times. So this is pretty solid asset to liability ratio by the end of 2022. And next one, let's look at debt to equity ratio, right? So we talked about this in our prior videos. So this really tells a company's invested capital structure. So the 3% means in here is for every $1 of invested capital of Tesla, right? 3 cents coming from long-term debt, and then 97 cents, right, of the $1 really came from total stockholder equity. And if you look back in 2018, the situation was totally opposite. So for every $1 invested capital back in 2018, right, 66 cents came from long-term debt and only 34 cents came from total equity. So again, Tesla made a significant improvement, right, on its financial situation from 2018 to 2022. Let's look at the next one. So next one is net earning to debt. So this is really interesting one. So this really compare the net income in 2022 is about 12 billion, and of its debt, long-term debt is about 1.6 billion, right? So Tesla really made almost 8 times of net earning compared to its long-term debt. So, right, for Tesla, they had no issue to pay off its long-term debt in 2022. And if you look at in 2021, right, so here is pretty interesting. The net earning was 5.7 billion and almost same amount long-term debt in 2021. So the company, if they want, they can pay off the long-term debt with no issue. And if you look at back in 2018, right, so the company actually was in loss situation and borrowed about 9 billion in long-term debt. So when we look at 2018 and 2019, right, back then probably will ask the question, hey, does the company really carry too much debt? Will the company has solve an issue in the future, right? But again, company made significant improvement from 2018 to 2021 of net earning to cover its long-term debt. And the next one we're looking at it really is the interest coverage ratio. And this one, we need to calculate the company's EBITDA. So EBITDA is net income, add back interest payment, add back tax, add back depreciation, and amortization. So this really give you a company's true earning, right, without considering its tax laws, right, the capital structure, and depreciation, all that. So bank, right, usually look at the interest coverage ratio when they loan out money to companies, and usually they like to see above 4 times. And in 2022, right, the company EBITDA was 16 billion, and the total interest payment for the year is about 200 million. So the coverage is like 85 times, right? And this is really like outstanding number. And the bank shouldn't have any concerns, right, with its loan to Tesla. But if you look back in 2018, right, so the company EBITDA was about 720 million, and its interest payment, right, is almost the same amount. So back then, right, the the banks may have concerns to continue to loan out their money, right? So the same we can see, hey, its debt to equity ratio is also is like 66%. So all these numbers really going together. And so what does really mean, right? So this really tells me back in 2018, right, when we look at its company financials, we might have concerns to say Tesla probably carried too much debt back then. But now in 2022, right, like the company just have very strong financial strengths, and the company has no issues to pay off its long-term debt. So at the end of 2022, right, Tesla does not seem like carry too much debt at all. Okay, so this is it for today, and hope to see you next Friday. Thanks so much for your time. Bye.